In this video, we're going to explain what volume is, what it tells you, and why not understanding it leads traders into moves that don't last. A common mistake most traders make is thinking volume tells them when to buy or sell. They see a spike and assume strength. They see low volume and assume weakness. That's where the confusion begins. Volume is not a signal, it shows participation. It tells us how many traders and investors are actively buying and selling during a move. The price will show you where it is moving. Volume shows how much activity is behind that move. If there aren't enough traders and investors participating in that price move, the move itself doesn't tell you much. If price moves and volume increases, more traders and investors are getting involved. But if price moves without an increase in volume, there may not be enough activity to support it, and the move often does not continue. This is where many traders get caught. They see price moving and assume strength, but they fail to ask if traders and investors are actually backing the move. But volume can still be misleading, even when it looks high. The same level of trading activity can show strong interest or fading interest depending on where it appears on the chart. The focus is not just on how many traders are active, but whether that activity is happening at an important area on the chart where price has previously reacted. So instead of focusing solely on whether price is going up or down, shift your focus. Look at whether other traders are actively participating in the move and whether that activity is happening at the important key areas on the chart. Start with structure. Watch where price is compared to levels it has reacted to before. Then observe how price behaves as it approaches those levels, whether it holds or pulls back. Next, check volume to see if traders and investors are actively participating during those moves. Then look at momentum to see whether the move continues or starts to fade. Only when these pieces align do you consider taking action. By following this process, your decisions become more structured and repeatable. You stop reacting to price movement and start observing and interpreting what the chart is showing. When you do take action, you begin with a smaller position, usually about half of the total capital you plan to use. This helps you control your capital exposure and only add more if the chart continues to support your position. Position size affects how you respond. If the position is too large, it becomes harder to stay calm. When that happens, you start reacting. By keeping your positions size controlled and manageable, your thinking stays clear and your decisions remain steady. This is how you build discipline over time. Volume does not behave the same way in every market condition. In strong trends, increased volume often supports continuation, and price tends to keep moving in the same direction. But in choppy or sideways markets, volume becomes less reliable. You may see a lot of trading activity but little continuation. This is often seen as prices moving back and forth without making any real progress. So, before placing trust in what you see, step back and look at the environment. Observe whether price continues rotating back and forth between key levels or moving right through them. Doing this will help you determine how much importance you give to participation during that move. When conditions are clean and the trend is steady, volume tends to support continuation. But when conditions are messy, volume can mislead you. So, under choppy situations, it is best to limit your capital exposure or choose not to trade at all. Then, you wait for clearer conditions. That way, you are better able to react and not try to force trades. Your job is to stay in control. And when you learn to read participation correctly, without rushing, without guessing, and without overexposing your capital, you begin to approach the market with more clarity, consistency, and control. In the next video, we'll learn how to use the MACD indicator to understand momentum and how combining it with volume can help you decide whether a trade is worth taking or not.